What are index funds, and is it really worth investing long-term in their performance over the last 3 years? Many investors are looking for ways to invest in the stock market but don't know where to begin. That's where index funds come in. Index funds are a type of mutual fund that invests in a portfolio of stocks that track a particular index. This makes index funds an attractive option for investors who want to take advantage of the stock market without having to develop a full portfolio of stocks on their own. But how do index funds work, and are they really worth investing in over the longer term? Let's take a look at the basics of index funds, some of the advantages and disadvantages, and then explore how they've performed over the last 3 years. What are index funds? Index funds, also known as index-linked funds, are designed primarily to track the performance of well-known stock market indices. That means that a fund management company will typically purchase stocks in a variety of companies in the same proportion as the index itself. So a fund replicating the S&P 500 would buy 500 stocks in the same proportions as the S&P 500 index. Index funds are a type of passive investing, and they have become increasingly popular over the last decade, especially among younger investors who are looking for a low-cost way to build up a portfolio. The benefit of investing in index funds is that because the investor does not have to actively manage the portfolio, they can take advantage of lower fees than other actively managed funds. Another advantage of index funds is that when you invest with a certain index, such as the S&P 500, the index itself is made up of stocks from large, established companies. That means that the performance of those companies tends to be consistent over the long term, which provides a level of security to your investments. Advantages and disadvantages of index funds. When it comes to advantages, as we mentioned above, the key advantage of index funds is that they provide a low-cost way to invest in the stock market without actively managing the portfolio. Additionally, because the stocks tracked in the index funds typically represent larger, more established companies, it gives investors a diversified way to take advantage of the stock market without having to focus on any particular company. However, there are some drawbacks to index funds as well. Index funds tend to be more volatile than other investments. They can go up or down very quickly depending on the performance of the stock market. Additionally, index funds don't provide much in the way of dividend or income. So if you're looking for a steady income stream from your investments, index funds may not be the best option. Finally, because index funds are typically managed by third-party firms, you may have to pay a fee for their services. It's important to read the fine print and understand exactly what you're paying for before committing to any particular index fund. How have index funds performed over the last 3 years? Index funds have generally done well over the last 3 years. In fact, the S&P 500 index, a widely followed stock market index and a popular index fund investment, has been up almost 16% over the last 3 years. While the performance of the stock market can change quickly, index funds have generally done well over the longer term. According to Morningstar, a leading financial research firm, index funds have generally provided higher returns than actively managed funds. Additionally, index funds have had lower volatility, meaning their returns have tended to be more consistent over the longer term. The bottom line: index funds are a good option for investors who want to take advantage of the stock market without having to actively manage their own portfolio. While index funds don't provide the same level of potential return as actively managed funds, they tend to provide higher returns at a lower cost, and their performance over the last 3 years has been solid. It's important to understand the risks of investing in the stock market, but index funds can be a good way to build your wealth over the long term.